Mobile payments are regulated transactions that take place through your mobile device. That is, instead of paying for products or services with cash, checks, or physical credit cards, mobile wallets and mobile money transfers allow you to pay digitally. Since the growth of Apple Pay and other NFC payments isn't slowing down, adapting to mobile payment technology is extremely valuable for your business. Mobile payments can be used in a peer-to-peer context or to pay at a brick-and-mortar business. In a peer-to-peer mobile payment, you can make an electronic transfer via your bank, say, to pay back a friend for dinner or to pay someone on Craigslist for a piece of furniture. For mobile payments at a brick-and-mortar business, you can use an app on your mobile device instead of cash or a card to pay for specific goods or services at the checkout counter. In this instance, the business needs a specific type of point-of-sale device to process the transaction. A mobile wallet is a digital wallet on your phone. In a mobile wallet app, you can add and store the bank details associated with your debit or credit card securely. Some mobile wallet apps allow you to add more than one card. So instead of using your physical card to make purchases, you can make a mobile payment with your device. If you want to accept mobile wallet payments at your business, you need to have a point-of-sale system that's equipped with the technology that can process the transaction. The technology that underpins mobile wallet payments is near-field communication, NFC. This is what enables two devices, such as your phone and a payments reader, to communicate wirelessly when they're close together. Typically, a mobile device has to be within 2 inches from a reader to process the payment. NFC is a subset of radio frequency identification, RFID, a technology that allows us to identify things through radio waves. RFID has been used for decades to scan items in grocery stores and luggage on baggage claims. Contactless payments have gained significant traction, and more businesses are beginning to accept this secure form of payment. From messaging to transportation apps to health monitoring, we're using our phones more and more to take care of day-to-day life. So it's no surprise that we've seen a proliferation of mobile payments apps in recent years. And a majority of Gen Z consumers, 60%, prefer to use digital payment apps, compared to Gen X, 54%, and baby boomers, 44%. There are a variety of companies that offer mobile payments apps. The most popular are Apple Pay and Google Pay. If you have a more recent model of an iOS or Android device, chances are that it can support a mobile payments app. On the merchant side of the equation, Square offers a payments processor and system that can accept mobile payments. All you need to start accepting Apple Pay and Google Pay at your business is the Square reader for contactless and chip and your mobile device. Check here to see whether your device is compatible. Most new iOS and Android models are NFC, or contactless. Payments are payments that occur in person between a mobile device and an equipped payments processor. To make a contactless payment, you need to have a mobile wallet app on your device or use a contactless-enabled credit or debit card. Learn how to check if your card is contactless-enabled here. To accept an NFC mobile payment at your business, you need a payments reader, such as the Square reader for contactless and chip. Contactless payments are as secure as EMV chip card payments but have some upsides when it comes to usage and speed. Below are the most popular examples of NFC contactless payments and how to start paying with them. To learn more about NFC, read our in-depth guide, What is NFC? Everything you need to know about near-field communication. Apple Pay works on the iPhone, version 6 or later, as well as the Apple Watch. To pay with Apple Pay, add any debit or credit card to the wallet app on your device. When you're at a store that accepts Apple Pay, hold your iOS device over the payments reader while holding your finger on the Touch ID button. If you are using a phone with Face ID or an Apple Watch, you can unlock the phone either with your face, a passcode, or, in both cases, a double click on the side button to activate the unlock feature. This adds another layer of protection. If you are a seller setting up Apple Pay, you will need a Square reader enabled for NFC. Customers can also pay online through a checkout page using the Buy with Apple Pay button. If you run an online store, you can accept Apple Pay through your app or website without a reader. Read more about how to use Apple Pay and accept it at your business. Google Pay is available on all NFC-enabled devices that run Android version 4.4 or later. To use Google Pay, open the app on your phone, and complete the transaction by holding your device over the payments reader. Google Pay requires you to have a secure lock screen. Some credit and debit cards are enabled with contactless NFC technology. To check whether your card is contactless enabled, look for the wave-like logo printed on the front or back of your card. To pay, hold your card over the payments reader until you hear a beep. Using mobile payments is simple and secure. To pay with your mobile device at a store's checkout counter, hold your device close to the NFC-enabled payments terminal. The reader should be within 2 inches of the mobile phone to set the transaction in motion. What's happening in a mobile wallet transaction is that your device and the NFC-enabled point of sale are essentially talking to each other. Using a specific radio frequency, they pass encrypted information back and forth to process the payment. This all takes just seconds. In fact, speed is one of the coolest parts of NFC payments. They take a fraction of the time of magstripe and chip card transactions and are leagues faster than cash. There's also something called tokenization at play in a mobile payment transaction. Tokenization is part of why mobile payments are so secure, as the technology safeguards your bank details in mobile payments apps. Let's take Apple Pay as an example. Here's how it works. After you take a picture of your credit card and load it into your iPhone, Apple sends the details to your card's issuing bank or network. The banks and networks then replace your bank details with a series of randomly generated numbers, which is the token. That random number is sent back to Apple, which then programs it into your phone. This means that the account details on your phone can't be cloned into anything valuable to fraudsters. To accept mobile payments at your store, you need to get a point-of-sale device that's equipped with NFC technology, such as the Square Reader for contactless and chip. Once you get your Square Reader, it's easy to start accepting Apple Pay and Google Pay right away. All you do is ring up a purchase, look for the green light to appear on the Square Reader, and have the customer hold the phone over the device to pay. The whole transaction is completed in seconds. Mobile payment technology allows users to make transactions digitally through mobile devices, example smartphones, tablets, using methods such as near-field communication, NFC, quick response, QR, codes, and mobile payment apps. This enables customers to pay for goods and services without physical cards or cash. The growth of the global mobile payment market, valued at $2.98 trillion in 2023 and projected to reach $27.81 trillion by 2032, is transforming how customers interact with businesses and manage their finances. The widespread adoption of smartphones, improved security features such as encryption and biometric authentication, and changes in customer behavior, especially those accelerated by the COVID-19 pandemic, are driving this shift. This technology has also helped expand access to financial services for underbanked or unbanked populations, enabling greater financial inclusion. Below, we'll explain how mobile payment technology works, why businesses are adopting it, and its challenges and risks. The common technologies that power mobile payments. NFC. NFC allows two devices to communicate with each other when they are in close proximity, typically defined as a few centimeters apart. Mobile payment services such as Apple Pay, Google Pay, and Samsung Pay use this technology to enable users to make payments by tapping their smartphones at point-of-sale (POS) terminals. QR code payments. With QR codes, a mobile device's camera scans the code at checkout to initiate payment. Apps such as WeChat Pay and Alipay, which are popular in China, use this method widely. Bluetooth and beacon technology. Some mobile payment systems use Bluetooth or beacon technology to facilitate hands-free payments in-store, but this is less common. These technologies can power payments through the following mobile payment methods. Digital wallets. Digital wallets store payment information such as credit card and debit card information digitally. Examples include Apple Wallet and Google Wallet. Users can make payments directly from their digital wallets either in-store or online through NFC, QR codes, or Bluetooth or beacon technology. Direct carrier billing. Through direct carrier billing, users can charge purchases directly to their mobile phone bills. They often use it to purchase digital goods such as apps, games, and subscriptions. This method adds the transaction amount to the user's phone bill or deducts it from their prepaid balance. Banking apps. Many banks have mobile apps that let users transfer money, pay bills, and make purchases directly from their bank accounts. These apps often integrate with other mobile payment services. For example, a bank account might be an included payment method on a digital wallet. Mobile payment technology enables the transfer of funds from a user's account to a business or service provider via a mobile device such as a smartphone or tablet. Here's a step-by-step look at this process. Users download a digital wallet app, example Apple Pay, Google Pay, Samsung Pay, and link their payment methods, example credit cards, debit cards, bank accounts. The digital wallet securely stores this information. Often, it uses tokenization to keep that information secure, meaning it saves the payment information as a unique token, i.e., string of numbers, rather than as the identifying financial details. Even if a fraudulent actor intercepts the token during the transaction, they cannot use it to make unauthorized purchases. When a user wants to make a payment, they open the digital wallet app and select their preferred payment method. The user authenticates the transaction, which can involve entering a PIN or using fingerprint recognition, facial recognition, or other biometric methods. If the user pays using NFC technology, which is common in physical stores, the user holds their mobile device near the business's NFC-enabled POS terminal. The devices communicate wirelessly over a short distance. If they pay using a QR code, the user either scans a QR code provided by the business or displays their own QR code for the business to scan. The code contains the necessary payment information or a link to it. In some cases, the business uses Bluetooth or beacon technology to detect the user's device as they approach the checkout area. The technology then initiates payment automatically or with minimal user input. For NFC and other tokenized transactions, the digital wallet sends the tokenized payment information to the business's POS system. Encryption helps prevent interception of the payment data or access by unauthorized parties during transmission. Some mobile payment systems also generate a unique, one-time security code for each transaction, further reducing fraud risk. The business's POS system sends the payment data to the payment processor or acquiring bank, and the payment processor contacts the card issuer or bank to authorize the transaction. The card issuer or bank verifies the token against the original card details, checks for sufficient funds or credit, and approves or declines the transaction. Once the transaction is approved, the payment processor sends an authorization code back to the business's POS system confirming that the payment was successful. The business's system provides a receipt or confirmation to the user. In some cases, the system might update or replace the token used for the transaction with a new token for future use. The user typically receives a notification on their mobile device confirming the transaction is complete, along with details such as the amount, business name, and time. Many mobile payment systems integrate with loyalty programs and automatically apply discounts or earn rewards points during the transaction. They record the transaction in the user's digital wallet app, the business's records, and the records of the user's bank or card issuer. Why mobile payment technology is so popular with businesses. Customer expectations. Mobile payments allow businesses to meet customers' expectations for fast, convenient payment processes. They can provide a key competitive edge and drive customer loyalty. They can enhance brand perception among tech-conscious customers by positioning businesses as forward-thinking and innovative. Lower costs. While mobile payments do come with processing fees, they can also decrease cash handling, lower fraud rates, and simplify payment processing, which can reduce transaction costs in the long term. Easier reconciliation, automated, real-time mobile payment systems simplify the reconciliation process and reduce the amount of time and resources needed to manage financial transactions. This efficiency allows businesses to focus more on growth-oriented activities rather than administrative tasks. Deep analytics and customer insight, mobile payment platforms provide businesses with detailed analytics on transaction patterns, consumer preferences, and spending behaviors. This data helps them refine business strategies, fine-tune inventory, and customize marketing efforts to specific customer segments. Security, mobile payment technology uses sophisticated security protocols such as tokenization and dynamic encryption to reduce the risk of data breaches and fraud. These protocols protect businesses and customers. Omnichannel experience, mobile payments create a cohesive, omnichannel experience with consistent payment options across physical, online, and mobile platforms. This integration improves the customer experience and allows businesses to capture and analyze cross-channel data for more personalized and effective marketing tactics. Global expansion, by supporting multiple currencies and languages, mobile payments help businesses more easily expand into new markets and cater to a global customer base. This capability is particularly advantageous for e-commerce and digital services that rely on borderless transactions. Financial inclusion, mobile payments provide access to a broader customer base, including regions and people who might not have access to traditional banking services or infrastructure. Strategic partnerships, businesses that integrate mobile payments often become part of a broader digital ecosystem. This gives them access to technology providers, financial institutions, and digital platforms with whom they can form strategic partnerships that lead to new business opportunities, better service offerings, and a more competitive market position. Some risks and challenges that businesses should be aware of when working with mobile payments. Security vulnerabilities. Hackers frequently target mobile payment systems with cyber attacks. They develop their methods by seeking vulnerabilities in mobile applications, communication channels, and user devices. Businesses must invest heavily in security infrastructure, constantly update their systems to protect against these threats, and communicate clearly with customers about their security protocols to maintain confidence in these systems. Regulatory and compliance challenges. Mobile payments are subject to a variety of regulations including data protection laws, payment processing regulations, and consumer protection standards. Businesses should work with legal and compliance experts to navigate these laws and regulations across all jurisdictions in which they operate and must continually update their policies, practices, and technologies as requirements evolve. Ongoing compliance comes with long-term operational costs and requires a dedicated compliance infrastructure. Technology integration and maintenance. Integrating mobile payment technology with existing legacy systems can create major hurdles. Older POS systems, financial management software, and customer databases might not be fully compatible with new mobile payment platforms, which can lead to costly upgrades or the need for custom integration solutions. Mobile payment systems are also vulnerable to technical issues such as outages, slow processing times, and connectivity problems that can further disrupt business operations. Businesses must invest in infrastructure, including backup systems and redundancy. Adoption and user experience. While mobile payments are growing in popularity, not all customers are comfortable with or interested in adopting this technology. Some might be resistant because of security concerns, lack of familiarity, or a preference for traditional payment methods. Refining the user experience can help encourage adoption, and businesses should invest in high-quality user interface and user experience design to avoid poorly designed interfaces, confusing authentication processes, and cumbersome payment steps that can lead to user frustration and abandoned transactions. Financial risks and costs. The initial investment required to implement mobile payment technology can be substantial, especially for small and medium-sized enterprises, SMEs. Beyond the cost of the technology itself, there are expenses related to staff training, system integration, and ongoing maintenance, as well as transaction fees once the system is in use. Businesses must carefully calculate the return on investment to ensure that the benefits outweigh these costs, and they should try negotiating favorable terms with payment providers, if possible. Market fragmentation and competition. The mobile payment market consists of multiple platforms, example Apple Pay, Google Pay, Samsung Pay, and standards that change across regions and devices. This fragmentation can complicate the user experience and create a more complex and costly implementation process for businesses. It also creates competitive pressures among mobile payment providers, who must continually differentiate their payment experiences and invest in technology, marketing, and customer service to maintain a competitive edge. Privacy concerns. Mobile payment systems collect vast amounts of data on customer behavior, preferences, and transactions. While this data can be valuable for business analytics, it can also raise privacy concerns. Customers expect transparency and control over their personal information, and businesses must show that they respect customer privacy while complying with data protection laws. Dependency on technology providers. Businesses that adopt mobile payment technology often depend on third-party providers for payment processing, security, and compliance. This reliance can be risky if the provider experiences technical issues, security breaches, or changes in service terms. Businesses must carefully vet their providers, establish strong contracts, and plan contingencies to mitigate these risks. Thank you for watching this video.